My name is Paul Stewart. I'm the Government Affairs Director for the San Mateo County Association of Realtors. It's a long story about how the Government Affairs Director came to head up a homeownership workshop. If you have time afterwards, I'll be glad to explain it all to you. The concept came for this workshop from talking to individuals who were maybe not necessarily ready to buy right now, or were trying to become first-time home buyers. And I will utter to you what got me thinking about this whole concept. One of the folks they were talking to, who was not a realtor, said, and I quote, "Your FICO is whack, so we're not going to do FHA. We're going to try Freddie and Fannie and see if it flies, but it depends on if the qualified residential mortgage rules are in effect. You are a consumer. You have just heard more likely Greek or Latin for the most part. You may know some of the terms, FHA, okay, Federal Housing Administration, but what do? What kind of loans can they provide to prospective home buyers?" And it realized that, much like in the medical community and in other communities, they have their own language, but in dealing with consumers, particularly in the area of real estate, it's important for the consumer to at least be conversant and understand some of the things that are used to describe the home buying process, the lending process, and the homeowner insurance and title insurance process. So today we're going to present to you three panels. First, realtors, then lenders, and then the title and insurance panel, roughly following the home buying process. So why don't we begin with our first panel? Our first panel is a collection of experts, realtors, in the real estate transaction of buying a home, as are all our panelists. Your moderator for this group is Mary Hunt. She's been a realtor since June of 1977, and her license is with Clay Herman Realtor, Inc. in Burlingame. Mary was named Realtor of the Year in 1982 and remains a member in good standing with the National Association of Realtors, California Association of Realtors, and what a surprise, the San Mateo County Association of Realtors. In 2010, she received the Distinguished Service Award honorary member for life with the California Association of Realtors. And one of the questions this panel will answer for you is, why do you need a realtor? For one, I can look everything up on Craigslist. Boy, you know, you sure can. And what happens when you get past that pretty picture? How are you going to be able to negotiate the chattel and fixtures, going back to my example? And they'll also answer other questions like, what's the difference between a realtor and what's called a licensed agent? Anyway, without further ado, let me call up to the podium Mary Hunt.
Thank you, Paul. Can you hear me okay? Yes. Well, I have a lot of battle scars, as you can tell from having been in this industry since 1977. And I love every minute of it. And it's going to be really hard for me someday to face the fact that I should probably retire. But there's nothing more exciting than buying a home and having a good realtor to help you. So with that, I'm going to call on the panel one at a time. I have some questions here that I will be asking them to help them get rolling on their topics. And then I would also like to see people from the audience, perhaps, that have a few questions. So, without further ado, our first panelist is Alexandra Rodriguez. She's been a realtor for 8 years, and she is with Summit Realty. Alexandra, I have a couple of questions for you. Okay. First one is, renting can be so convenient with so little commitment and responsibility. So when and why should a person think of buying?
Well, if you have good credit, if you have a stable job, if you have some cash in the bank, and plan to stay in the community or in the area for 5 to 7 years, then definitely buying is a good financial decision.
Thank you. Okay. All right. Our second Realtor today is Carol Murin. She's broker owner of Capital Exchange Realty in San Mateo. Carol has been a realtor for over 15 years. So, Carol, I have a question for you. What is a realtor?
Well,
And why should I use one?
Mary, you and I both know what a realtor is, but unlike most of our crowd, by the way, thank you all for coming. It's really good to have you here. And I hope that you each can walk away with something that's going to be valuable. So what is a realtor? You're probably thinking, well, why do I care? Big deal, right? Well, there is a big difference between a licensed agent and a realtor. You've all seen the R's with the little circle that has an R in it, the trademark. You've all seen it. It's on our business cards. It's on ads. You probably saw it on this. That designates what a realtor is. More importantly, a realtor is a licensed individual. They're licensed by the state of California, and they're also members of the National Association of Realtors. And what that means to you is that we have to, I shouldn't say have to, we are allowed to perform under a very strict code of ethics. And this is important not only to first-time home buyers, but for anyone who's going to be purchasing a home. So when you start to work with an individual, this is something you might want to find out. You know, see if they are just a licensed agent. You know, like the person down the street that got their license last week, and they're ready to go and they're ready to take you into their hands. Well, it's a huge undertaking, your first home. You want someone with expertise. You want someone with training. Realtors have to, we have to stay abreast of what's happening in the community, and we're always learning and undertaking things that are going to educate us so that we can better help you, because you're the most important person to us when we're working with you. That's what a realtor is.
Jess Gutierrez is broker owner of Vision Real Estate Group. Jess has been a Peninsula Realtor for 18 years and is a Bay Area native. So he has the pulse of the community, obviously.
Thank you.
So once we have found a home that we want to buy, can we just call the owner and ask if they want to sell to me?
No, I wish it was that easy. No, we usually recommend putting all your proposals or what we call contracts in writing and presenting it to the seller's agent that will present it to the seller directly. We also recommend that you usually have your agent, your own independent agent. So buyer would have their agent, seller would have their agent. It just works easier that way, and it doesn't get into any kind of disclosure limitations.
We're going to move on to now the lender panel, which will hopefully do an expanded job of answering your questions. A couple things, obviously. These are interactive panels. Each of them will answer some questions to give you some rudimentary knowledge or explain an ABC part of the home buying process. As they go through that, don't be afraid to raise your hand and say, what's this, what's that, I've heard this term. That really helps you understand when it comes time for you to buy a home. Hopefully from this first panel, and I have great faith in them, I've worked with them all, you now understand how to consider what kind of home you'd like to buy. Everybody, and I'm not being derogatory, but most people launch into the home buying process waiting for that gem that's just been hidden with a white picket fence in Atherton in a price range you can afford. Remember, the affordable housing policy in Atherton is if you can afford it, you can live here. Anyway, so now we've talked about how the realtor gets involved, why you should use a realtor as opposed to a licensed agent, how they can help you through the process, determine what kind of dwelling to buy, what sort of things do you want to keep, what sort of things do you want to let go. Contingencies that Jesse was talking about are very important because they are sort of the stop and go of the process that allows you to once again reevaluate the properties you're looking at. Not to mention the properties that once you told your realtor really what you're looking for, and also the price range, that they can look for. There it is. The white picket fence, that condominium, that studio apartment, it's good to go. So what's the next step? The next step is getting your funding. And we have a lender panel that will answer questions about the lending process. For example, why should I get a pre-approval letter? I'll let them answer that, but that's an important component in buying a home, in the home buying process. The other thing I wanted to make some a few housekeeping. Number one, I want to graciously thank the San Mateo Public Library for being our venue sponsor and assisting us with this. The Examiner is our media sponsor. This whole workshop is put on by a grant from the National Association of Realtors. We want to reach out to individuals and say, you know, if you're a more informed consumer, you're going to be much happier when you ultimately do decide or can purchase a home. So I've already spoiled the water. Once again, without further ado, I would like to introduce Lisa Brennan from First American Title. She'll be your moderator for the Lenders Panel.
Thank you very much, Paul. How's everybody doing? Good? Ready to buy a home, hopefully? I'm going to moderate the lender panel here. I know, one of the things when you're looking to buy a home, obviously, is where the heck am I going to get this money? And unless you've got a rich or wealthy relative that's going to bequeath their fortune to you, you're going to have to speak with these guys right here. So, let me introduce them. We have Young Kim, who is with Wells Fargo. We have Angie Holgram, who is with People's Bank. And we have Murat Schaub, who is with, I apologize, Bank of the West. Thank you. And these folks have, anywhere between 10 and 20 years worth of experience in the banking and lending industries. So they are among the best in the industry and certainly in the Bay Area in their field. So you guys are well served having them on the panel. So first I'm going to ask a question. This is kind of, the chicken and the egg type of question. And maybe we'll have Young answer this. Do I find my house first and then come to you to get a loan? Or would I apply for a loan first and then go find my house?
That is a great question, Lisa.
Thank you.
The actual answer to that is yes and yes. The housing market is such that you can go about it a lot of different ways. I would not recommend sidestepping your realtor. I think that the most important thing to understand is that your home buying team comprised of your lending institution, your loan officer basically, one of us, as well as your realtor. We're working for you as your team. And you can go to us. What's going to happen in this type of market, if you go to a realtor, they're going to basically send you to us because they need to know that you qualify for the financing necessary to buy the home. Now, that's not to say that one needs to happen before the other, but at the end of the day, it's all going to happen regardless. I hope that
That was great.
answers the question.
Thank you. Now, Angie, in order to qualify for a loan, do I need to have a full-time job? And what happens if I just change jobs? Or perhaps I was laid off recently, or maybe I'll be starting a job in the next couple of months. Will I be able to qualify for a loan in those circumstances?
Well, first of all, you should have a full-time job, at least 2 years. If you also have a part-time job that is a permanent part-time, you should be doing it for 2 years also. If in any event that you change job, it should be in the same line of work or it's an upgrade to your salary. So there is no really difference if you change job, or even you are a student and you have a full-time job, your student can be used as an employment to qualify for a job as long as you qualify for the money that you are borrowing from us, from the bank.
Thank you. Murat, this question kind of dovetails nicely into what I can afford. Aside from my monthly payments, what other monthly or annual expenses should I be prepared for when purchasing a home?
Well, just like Young was discussing, the property taxes and the homeowner's insurance. Those are the other two. And also you can have, if it's a condo, you have what's called homeowners association dues. And those could vary depending on the condo association, anywhere from $50 up to $500 or even higher. Just depends on the property that you're purchasing, what kind of association dues they have. The other quick thing that I just wanted to add to what Young was saying, when it comes to qualifying, different loans and different loan programs may be close or different back-end ratios. So that 45% may be 43% or 40% or 50%, just depends on what type of loan program you're going for, what type of financing.
You have your realtor, you found your home, you work with your lender, you now have your pre-approved financing letter, and you're ready to roll, and you're buying a home. Now what? What's title insurance, and why do you need it? Homeowners insurance, everyone knows what it is, but what does it cover? Why is it important to have? And I will throw an editorial comment in here, particularly in earthquake country. Okay, what's an escrow? Why do I have to go through escrow? And one that I've gotten asked more than once, what is a neutral third party to the transaction? Because it does exist, and it has to be done by law. So without further ado, and Palermo is your moderator for your last panel.
Thank you. So I have a panel of 3 exceptional representatives here today, and I just want to do a quick introduction of each of them, and then we'll step into the questions. So I want to start with Corin, our farmers agent representative here today, and talk with him a little bit about explaining to us what homeowners insurance is.
Homeowners. It protects your home from catastrophic loss from specified perils. You need it when you buy a home if you've got a mortgage, because banks aren't going to lend unless their assets protected. It's made up of several parts. The primary coverage is your dwelling coverage, which replaces the structure itself. There's also separate structures, which would be detached garage, fence, that type of structure. Personal property, which is if you turn the house upside down and shook it and it fell out, would be your personal property. And loss of use, if your house is burnt in a fire, you have to move out, it will pay for rental housing while your house is being rebuilt under your dwelling coverage. Also, your liability. We don't focus as much on liability as we should. Everyone thinks about their insurance as being the reconstruction or repair of their asset. But there's 2 parts to your coverage. One is the structural coverage, and one is your liability coverage. And liability protects you from people suing you for monetary damages. And it's sad to say that we live in the most litigious society in the world, and you face losing a lot more in that type of situation than you do if your house is in a fire, because it takes into account a lot more of your assets. These are all also guided by your deductible. And your deductible is really the amount you're willing to self-insure. Obviously, the higher the deductible, the lower the premium, and we can get into that.
Okay, so homeowners insurance is very different from what title insurance is. And we're going to get into that, but we thought we'd first start with escrow. You've been hearing that a couple times. I know the lender panel mentioned it, the realtor panel mentioned it, and Corin's been just mentioning escrow. So I want to go to Katie and just have her tell you, well, what does that mean? What is an escrow holder? A settlement agent? What does that mean? What does escrow mean, Katie?
So I think Paul already actually made fun of my answer. We're that neutral third party. What's a neutral third party? We're escrow. We retain the money, your earnest money deposit. We hold that. We collect the documents. A seller doesn't want to sign a grant deed without knowing that he's going to have his money. So we have the document signed, we collect the monies, we collect the lender's monies. We get mutual instructions from the agents, from the buyer, from the seller, from the lender. And we are the ones that actually disperse the funds, record the documents when we close.
And so we're going to jump to Kathy Fenolio, and she's going to tell us a little bit about what is title insurance.
Good evening, folks. The mics only really work for young. I don't know what that's about. But anyway, I know we're short on time, and I talk really fast naturally. And I've probably got the most boring subject of all of it. So just know that up front. Okay. Title insurance is an insurance policy that's issued when 2 basic things happen with real property. One is the purchase, and the other is additional financing. When you purchase title insurance, you are purchasing two policies. Usually it's the owner's policy concurrent with the lender's policy, and it's done at the time you acquire the property. Title insurance is a little bit different, or a lot bit different than what Corn was talking about, in the effect that we mitigate the losses ahead of time. So this young lady here, she works for a title company. I work for a title company. Lisa here works for a title company. She mitigated our lenders panel. And basically what we're doing as a title insurer is we issue a report up front. That report is given right at the same time, within the first week or so of when your contract is signed. And it's a report on the property that basically says who owns it, to make sure that your contract was signed by a seller that probably owns the property. That's always a good thought, right? It tells us where the taxes are being paid, what obligations or loans that the seller has on the property. So this is a very good starting point, not only for your lender in order to evaluate the property, but also for your escrow officer and your realtor in order to make sure they know that they are following along with a contract that can actually be executed. So title insurers are mechanics. We issue title insurance after we take a look at the preliminary report and we walk through the steps of the escrow and then be able to insure the property into the buyer's name. The lenders don't want to get left out though. Okay, so what happens is when you're purchasing, the owners want to make sure that they actually have some security in the fact that they are buying a property that they think that they're buying from the person they think they're supposed to be buying it from. But the lenders also want to make sure that they have the right to secure a loan against that property. The buyer has the right to secure that loan, and that they indeed will be the owner at the time that loan is secured concurrently. So essentially, the policies are issued after close of escrow, after the process has been done, and what we do is we're mitigating any losses ahead of time. I'm going to skip ahead because I know, again, we're a little bit short on time tonight. So I'm going to cover a couple things. One is which is how much title insurance do I get? Your title insurance policy is based on your sales price and your loan amount. And it is good for as long as you own that property. An owner's policy of title insurance does not require a renewal premium. So basically, you pay for it once when you buy, and then you don't pay for it again unless a lender requires an additional policy at the time of a refinance or additional financing. So it's a shot. It's good for as long as you own the property, and it's a really good deal, by the way.